Hello and good morning, everyone. Happy New Year and welcome back. So today we'll be resuming my market snapshot series. So I know I've been on a break for a while, but happy to be back. So there's quite a number of things that happened over the holiday. This includes developments in the stock market, in the forex market. So we'll be trying to do a quick summary of the things that happened, what we will be expecting over the year. And then we narrow down to today, try to understand what are the prevailing market news, market patterns. And then once we understand these, we also take a brief overview on this week's non-farm payrolls, which are expected on Friday. And once you cover these, hopefully everyone will trade from an informed perspective. So as always, if you are new to this, you should know that these sessions happen every day at 11 a.m. Monday to Friday. And on these sessions, we usually try to understand what's happening in the markets. As always, these sessions do not constitute of any form of investment advice. They are not a recommendation to trade, so you should always do your own due diligence. So happy New Year to you too, Simon Gitonga, and everyone else. Can see Ken is back. Thank you for joining. Can also see Richie is back, and happy New Year to you too. Something weird is happening to my machine is scheduling a restart in 4 minutes. Let me see if I can handle this fast before we proceed. All right. If this keeps happening, then we might have to end the session and then restart again. I think it's something to do with IT and New Year updates. So, kind of give me a sec, and then I'll be right back. Perfect. I think we are back, and thank you guys for your patience. So it was just a quick update, and now we are back. So let's get started with what's happening in the markets today. And one of the key highlights I want us to observe is technically what's happening with indices. So if you go to tradingeconomics.com, click on indices, you'll notice that a majority of stock market indices are in the green. So far, the S&P 500 is up 0.08%. The Dow, the Nasdaq, the Nikkei 225 index, the FTSE UK 100 index, the German 40 are among the leaders in the gains as of this morning. Also, the Shanghai 50 index is also doing very well. So it's a very green market ever since the year started. And we are seeing a lot of optimism into equities, despite there being the alarming news of Venezuela. The market seems to be ignoring it. This also includes Venezuela itself. The stock market is also up. So technically, it's like the market is brushing the news away. So we'll be covering more on the key highlights. So first of all, the key mover of the week so far is copper, which started the year on a fresh boost of bullishness. And so far, it has hit a new all-time high, climbing by $6 per pound on Tuesday, hitting new record highs amid expectations of a further tightening in global supply. So gold, on the other hand, our favorite asset, has been on a very strong bullish momentum. It rose above 44.60 pounds on Tuesday, marking a third consecutive session of gains, driven by increased demand for safe haven assets. So on the inflation side, Philippines inflation rate at 9-month high, rising to 1.8% in the month of December. Singapore private sector PMI drops to 4-month low. Oil slips as traders weigh Venezuela conflict. And lastly, on the key highlights, ISM manufacturing PMI below forecasts. So we'll be looking at more on this, but first, let's go through the economic calendar. So yes, yesterday, being Monday, the 5th of January, we had the US missing both ISM manufacturing PMI and manufacturing prices. PMI was down to 47.9, down from 48.2, showing some weaknesses in the manufacturing sector. So manufacturing prices were also on the drop. We expected 59.0, but we got the same number as the prior month of 58.5. So today, we have an Italian bank holiday, but the rest of the market is open. We don't expect any major news. So yes, we'll be looking at German preliminary CPI, French preliminary CPI. This should be out. Yes. For German preliminary CPI, we don't have the data yet, but for France, we have a 0.1% increase in prices. That is over the last 1 month, that's December. So we'll be looking at services PMIs for Spain, Italy, and final services PMI for France and Germany. And then the total report for the Eurozone will be released at 12 midday. So later on, we'll get final services PMI at 12:30 for the UK economy. And then for the US economy at 5:45 p.m., yes, there will be a speech from FOMC member back in. So this being NFP week, there will be a particular focus on the US labor market data. So on Wednesday, we'll be starting with CPI, which is a measure of consumer price inflation in Australia at 3:30 a.m. tomorrow. Then later on, we'll get the CPI flash estimate for the Eurozone, and then the private sector ADP non-farm employment change for the US at 4:15 p.m. before we focus on IVA PMI, ISM services for the US, and JOLTS job opening still for the US. So the Ivy League University PMI for Canada is usually a very strong indicator of both manufacturing and services conditions in the economy. So this might be a big mover for Canadian dollar pairs. Then we get inflation report from Switzerland, where we're expecting 0.0%. That will be on Thursday at 10 a.m., 10:30 a.m. Then the weekly unemployment claims from the US at 4:30 p.m. on Thursday, before we get into Friday, where we'll be expecting the most important news of the week, which will be the US non-farm payrolls at 4:30 p.m. So we expect 62,000 job increase in the non-farm sector in the US for the month of December, and that would be slightly lower than the prior month, which was 64K. So unemployment rate is expected to improve slightly to 4.5%, which would be down from 4.6% in the prior reading. So an improvement in the unemployment rate would likely mean that the US labor market is strong, and as a result, the Fed would most likely consider holding interest rates steady on the next meeting. So speaking of the Fed, we know that the Fed will be making its next meeting on the 28th of January this year. And the first meeting of the year, we don't expect a change. So the market is pricing in a probability of 83.9%. The Fed will keep rates at the current level, which is a range between 3.50% and 3.75%. So far, the market is expecting 2 more rate cuts from the Fed, but the first meeting in January is likely to be a hold. So also, speaking about the Fed, we know that Jerome Powell's term is coming to an end, and he will be out in May. So new appointments are expected to begin happening this month of January, and we know that Trump is very much interested in replacing Powell by someone who he can manipulate, or someone who shares his ideas of cutting interest rates down to 1% or below. So that will be a key discussion point this year. And speaking of this year, let's talk about the top highlights that we should be on the lookout for before the year ends. So as you can see, there's quite a good article from Reuters. They cover some of the key highlights that are expected to be moving the markets this year. So yes, there will be risks from US midterm midterm elections. Also, we expect volatility from US interest rate cuts. Stock markets are expected to continue rising, albeit at a slower pace than in 2025. 2025 was so good for stocks, they overperformed. So we don't expect the same performance, but still the market is pricing in a potential rally this year. So borrowing costs in key markets are expected to remain high, especially in Japan, where interest rates are expected to rise to 1%. The dollar is expected to weaken, and the yen is expected to strengthen over the year. So there will be a lot of geopolitics talks, especially with what Trump started with Venezuela. US midterm elections and diverging monetary policies are among key drivers for world markets in 2026, alongside an artificial intelligence boom that has raised concerns about a tech share bubble. So there's plenty of risks that are lining up for the year. The nomination of the new Fed Reserve Chair in early January is a key event. Incumbent Jerome Powell's term expires in May. US President Donald Trump has pressured the Fed to cut rates, bringing central bank independence into question. The most underappreciated risk for 2026 is that the Fed eases monetary policy more than economic conditions justify, inadvertently reigniting inflation. So the Supreme Court is poised to rule on the integrity of Trump's sweeping emergency tariffs, while US midterm elections take place in November. Politics is also taking center stage after the US captured Venezuelan President Nicolas Maduro. Trump warned of possible military action in Colombia and Mexico and said Cuba's communist regime looks ready to fall. Canada and Greenland, targets of Trump rhetoric, are likely watching now how developments in Venezuela unfold. So it's a big year for emerging market elections. There will be elections from Hungary to Brazil and Colombia, a potential headwind after a strong 2025. So Hungary's Viktor Orban faces a race against time before April's election to turn the stagnating economy around enough to extend his grip on power. So Latin American elections will fall under the shadow of events in Venezuela, but wins by conservatives in Brazil and Colombia could bring the tighter budget policies and streamlined regulations that investors want. So here's a roadmap of this year and the key events that we'll be expecting. So mid-January, we get a new Fed chair announcement, which will be expected early January. Then the FOMC meeting, which will be happening, as we have seen, on the third week of the month. So there will be Thailand House of Representative elections in February. Then in March, you get the second FOMC meeting, where most likely we will be expecting a Fed rate cut. Then Hungary parliamentary elections in April, late April, the third meeting by the Fed. Then you get the United Kingdom local elections in May. Jerome Powell terms ends in May, and also Colombia presidential elections happen in May. So in June, we get the fourth meeting by the Fed, July, the fifth meeting, September, the sixth meeting. Brazil presidential and parliamentary elections will be happening in late September. The seventh meeting will be happening in October by the Fed. Then you get the US midterm elections on November. So lastly, the eighth meeting of the Fed will be happening in December. So that will be some of the key highlights to be watching in the markets. So on the stock market side, US stock markets in the US, Japan, and Europe should rally this year, but will struggle to match 2025's blistering gains. And this is according to a recent Reuters poll, which showed 56% of those surveyed forecasting a correction in the coming months. A potential sell-off in AI-related shares could also hurt broader sentiment. AI excitement has boosted valuations, feeding expectations for massive spending on infrastructure. Doubts return from AI investments and levels of debt some firms are taking on are starting to creep in. So analysts see the SP 500 going to 7,490 points by end of 2026. The Euro stocks at 623, implying gains of just over 9% and 5% respectively from end of 2025. So clearly, the market is still very positive compared to the last quarter of the year. So trends from last year expected to continue. We have seen the trends in gold, copper, silver extend their movement as of last week and the beginning of this week. So of course, we expect those trends to continue, a key driving point for the market. So the Fed is expected to cut rates in 2026 twice. So for the Bank of England, we expect at least 2 cuts. The Fed at least 2 cuts. The ECB is seen holding interest rates at the current rate, which is 2.0%. So we don't expect any major shift in the ECB, which has a single mandate of stabilizing prices or basically controlling inflation. Whereas for the Bank of Japan, which basically hiked interest rates in the last quarter, is expected to make one more hike later in the year and move interest rates to 1%. So on the debt side, we expect very tough debt negotiations on the 30th of January this year. So the US could go on a lockdown if they don't agree on a budget. So that debt negotiations will be a key thing as of this month. So while Trump hopes rate cuts will lower mortgage rates, longer-term borrowing indicators such as the 30-year Treasury yields, more sensitive to long-term government finances, heading to 2025 little changed. Bond yields and debt levels across major economies are expected to remain elevated given fiscal stimulus. Analysts polled by, just a sec. Analysts polled by Reuters forecast a 10-year Treasury yields to rise to 4.25% by end of this year, from around 4.17%, which is an estimate for today. So German bond yields are forecasted to rise to 2.97% from 2.89%. British and Japanese yield, by contrast, are expected to fall. So on the currency side, the consensus trade for a weaker dollar this year contrasts with a year ago, when stronger dollar expectations faded following the 2nd of April tariff turmoil. The dollar index, which had just had its worst year since 2017, is forecasted in a Reuters poll to weaken to 95.7 by year end, implying a 2.5% fall from current levels. The dollar's dominance is intact, but no longer unquestioned. The yen is expected to strengthen, leaving the dollar at 145 yen from 157 over that period, according to the Reuters poll. So cryptocurrencies remain a high-risk segment, and a strong correlation with tech shares should keep volatility elevated. So Bitcoin hit a record high of $125,000 in October before sliding. It ended the year down 6%, and now as we begin a new year, it's seen making a very strong rally, currently hitting $94,000 per Bitcoin as per yesterday. So cryptocurrencies are becoming increasingly sensitive to AI stock moves, meaning that we are seeing strong correlation between the performance of cryptocurrencies. For instance, you can see Bitcoin and Ethereum having similar charts with Nvidia and Microsoft, though Alphabet was on the breakout higher. So those are the key highlights of the items we should be looking out for the rest of the year. Of course, there will be more developments in the market. For instance, one development that we saw on the first day of the year was NEO shares. So NEO stock shares closed higher on record deliveries as traders line up next catalysts. So NEO shares closed higher on Friday after the Chinese electric vehicle maker reported record deliveries for December and the fourth quarter. The US listed stock ended up 0.78% at $5.14. So the delivery update was surprising because they were able to deliver more cars than Elon Musk's Tesla, and this being the second company to ever do that. The first one was BYD, and now we are seeing NIO doing the same, meaning that the Chinese EV sales are on the rise, and that will be a key discussion for investors this year, looking where to allocate in case you want to bet on the growth of the EV sector. Sorry, I wasn't sharing that. So the article is right here. I'll be sharing a link with you guys on the comment section. Yes, the link is already sent. So we move on to the next part, forex. So what has been happening with the currencies since the year started? So since the year started, the dollar has been pretty weak, same as the euro and Canadian dollar, with the Canadian dollar being the weakest currency. But so far, the New Zealand dollar and Australian dollar have been the best performers, as well as the pound being up 0.76%, 0.74%, and 0.3% consecutively against the USD. So the Japanese yen has seen slight gains, up 0.32% against the US. The Swiss franc is up 0.16% against the US dollar. So clearly, we are seeing these Asian currencies being much stronger than Western. So we don't know whether this will continue to be the theme for the market. But then if you look at today's performance, still the dollar is very weak. And the best performer so far is the New Zealand dollar, which is up 0.16% against the USD. So year-to-date performances show the differences, and clearly for Bitcoin, since the year started, it's up 6.59% against the US dollar. So on the stock market side, looking at the performance of the stock market as per yesterday, some of the key highlight gainers included Palantir, which was up 3.68%. Amazon was up 2.9%, Tesla 3.10%, Costco 2.49%. Clearly a market that opened quite positive. The financial sector seems to be the one that made the most gains, with stocks such as JP Morgan Chase being up 2.63%, Bank of New York Mellon 3.42%. So you look at credit services, they were all up, insurance, capital markets, asset management, insurance, property and casualty, regional banks, they were all in the green as per yesterday. So it seems like the market is betting strongly on the US banking sector as per this Q1, with top gains seen across board. So generally, the stock market was doing really well. Then Just a second. On the future side, if you look at the year-to-date performance, so since the year started, there is already big performances that can be seen in the futures markets. With platinum leading the curve, up 13.47%, silver is up 10.8%, palladium 7.76%, copper 6.8%, Bitcoin 6.48%, and Nikkei 225 index being the top one, up 3.75%, gold 3.27%, feeder cattle 3.1%. So clearly last year's trends are continuing through this year. So among the worst performers is natural gas, which is down 6.86%. Sugar is down 1.93%, and lumber 1.39%. So that being said, I believe now we can jump straight into some technical analysis and then try to understand what are the prevailing market patterns. I'm hoping that everyone can see my screen. So the chart right in front of you is a chart of silver, HGH6 on your MT5. So as you can see, we've had a very strong momentum since the week started. So just a sec. So now we are looking at consecutive 4 candlesticks since the week started of bullish momentum. So if you go to the 1 hour time frame, you will notice that this market has not been stopping since the markets opened. So far for today, you can see it has all been bullishness with pullbacks happening every now and then. And clearly, if the market is changing direction as per this movement, then we should most likely focus on yesterday's high as a potential swing, where the market would likely get to this area and then bounce from this area as it seeks to extend the trend. So clearly, a very strong start to the year for copper. So as the title of today's session suggests, stocks are on the rally. So if you look at the Hang Seng Index, it has been on a very strong bullish momentum since the year started. So this being the third trading session, you can see the strong momentum here. And if you go to the 4-hour time frame, you can see the strong break upwards. So on the H1 chart, you can see the strong rally yesterday in the evening, which was extended early this morning before making a pullback. So clearly it's a market to follow, meaning that if we get a pullback, then that's likely an opportunity to be looking for more buys. So same idea. We look at yesterday's high, and then we see if the market will be bouncing from here. So it's a wait and see kind of a market. You don't just jump in. Same thing with the UK 100 index, which just hit yet another all-time high as of this morning. So you look at the daily time frame, you can see the strong bullish momentum despite lagging around the month of November and December. Here we are breaking into a new high. So from the H1 chart, we just broke above the resistance in the current hour. So if we cross way above the current price, then that would likely mean that the rally would extend higher. So yes, a very strong bullish momentum market. From the day time frame, we have never seen that price there, which means that there are no candlesticks on the left, just new candlesticks coming in, and we are cruising into newer territory that you haven't seen before, and that's above 10,000 price level. So for the Nikkei 225 index, we are looking at a market that is looking to reclaim a new high. So from the daily time frame, you can see it was a very strong trend as per last year, majorly moving up, pulled back in the month of November. So November, we had this pullback about 8.92%. December, we attempted recovery, and now we are basically looking at a market that is looking to retest a new high. So from what you can see here, you can gather that this market is facing resistance here, unable to break into a new high. So it got exactly to the high we had seen here in the month of October. And immediately we got there, there seems to be some form of profit taking. So yes, a temporary pullback. So not the right time to be looking for a buy. Given the volume and momentum of the current set of 15 minutes candlesticks, it seems like we will be looking to retest previous lows before we breach into a new high. So for now, this is indicative of a sell-off happening right at the top, which would likely indicate that we could be going for a cup and a handle pattern. So given the strong momentum we are seeing here, more likely that we see the sell-off extend even lower. So potential targets include 52,011 and 51,505. So for the currency side, we have USDN, which was majorly on a sideways momentum since the month of November. So November, we have this high and this low in the month of December. So a lot of sideways momentum. So even if you look at the currency performance yesterday versus today, there seems to be some form of volatility that is not moving up or down, though there's more pressure towards the downside because yesterday's low was much lower than last week's low. So clearly a market that is showing some strength in the yen and weakness in the dollar. So yes, you've been pressuring to move even lower, but today hasn't yet retested yesterday's low. So more likely than not, we could be seeing the yen pressure the dollar again and look to retest yesterday's low. So for the dollar Swiss franc, we know that the Swiss franc was the strongest currency in the market as per last year. So yes, yesterday in the evening, we saw the Swiss franc bouncing from this resistance and then reclaiming previous lows. But then today we are seeing the exact opposite. So nothing much is happening below this area here, which seems to be a legitimate kind of support for this currency. And now we are seeing the market bouncing. So though I don't expect much volatility for today, good chance that we see the market retesting the day's high. That is the Asian session high. So on the Euro USD front, here is where we have everything, meaning that we have a pattern in place where this has been the resistance since the 24th of December. And every time the market has gotten to that area, all we have seen is the resistance working and the market reversing. So clearly, today is no different. The market retested the area again, and we are seeing sellers coming in here. So this would likely mean that the euro reverses direction and goes for the Asian session low. So as the market opens up for the year, we'll be expecting more volatility going forward, but for now, very short-term moves. So for Euro USD, I expect some drop to retest the Asian session low after bouncing from this resistance, same way it has bounced previously. So for Pound USD, we have seen a very strong bullish momentum, breaching a level that the pound was unable to break for a while. And after breaching, the market extended higher. But notice the pattern on how the breach happened. The market broke above that area, pulled back to retest that resistance, now turned support, and then pumped higher as of this morning. But then the price action we are seeing as of the London Open doesn't show signs of accelerating higher, which would likely mean that today we are trading in a range, and that range would mean the market retesting this area here. So if you are extending, we would see more bullish momentum extending higher, which is the direction of the trend. So even though we expect some form of pullback, the long-term idea is to look for bullish momentum on Pound USD. So USD, the currency that has started really strongly for the year, managed to break above the prior resistance that we saw on the 29th of DEC. But then after breaking, you can see the immediate reaction of the market pulling back. So which clearly means that the market was waiting for that break in order to make a strong reverse. And this can be seen as a strong entry, or call it a statement entry by sellers, which likely means that we are headed much further downwards. So you go to the 4-hour candlestick and you look at how it's beginning to shape up. Once it crosses, it could confirm a shooting star, which would likely mean that the market is headed back downwards, similar to the same candlestick that we saw here. So if it completes like this, then we should be looking for potential short selling opportunities. So as for gold, we remember the sell-off that happened on the 29th of December. Since then, gold has been on a recovery path. Of course, the long-term idea is reclaiming the previous all-time high at 45.50. So with the increased risk of geopolitics, the market is going back for safe haven demand. And so far, what we are seeing is more bullish momentum. So even if it's a slow climb, the idea is to be looking for pullbacks. So when gold makes these pullbacks, then we look for buying opportunities, not selling. So the same case applies to silver after making a new high. That was on the 26th of December at $84.931 per ounce. All we have been seeing is a path to recovery following the sell-off here. So even though it's slow, it seems to be sure. So even though we get these pullbacks frequently, they all represent opportunities to be looking for more bullish positions. So one key idea here is that this was a key area of resistance. Market broke above it, pulled back to retest, and is now looking to continue. So breakout, retest, continuation, breakout, retest, continuation. This seems to be the pattern we are observing in silver. So of course, we expect more bullish momentum. So as per oil, we have a key trend line here. This is on the 4-hour time frame. The market is really attempting to get to that particular trend line, though with a lot of challenges, and I expect that to be completed. So once we get to retest that area, then we should be looking for more short selling opportunities then. So for now, we are on this path towards $62.3 per barrel. So on US equities, the Dow Jones hit a new all-time high yesterday. Then after hitting a new all-time high, you can see the sharp sell-off that has happened as per this morning, meaning that after we got to this area, we basically completed what we would describe as a cup and a handle pattern. So what we are looking at here is a market that made the cup and then the handle completed here, which is a continuation pattern. So we still have to wait until the break of that particular trend line. So for now, there seems to be more bearishness in this market, perhaps maybe even to retest this area here. So while we are very bullish on equities, if you look at the day time frame, a new all-time high yesterday, yes, there will be these pullbacks every now and then, but the idea is to use the dips and buy them at lower prices. So it's the same idea for the NASDAQ. My chart seems to be a little bit too noisy. So you notice that there has been some form of a trend line here. Market completed the first wave, came back. Second wave came back, completed the cup and handle, pulled back downwards, but now is attempting to regain that particular trend line. So while we may see the short-term pullback here, the idea is to buy the dips and enjoy as the market moves higher. So notice how this low of the session has become the bottom here, and the market seems to be bouncing quite nicely. So the idea is to go for the high of the Asian session without expecting much volatility for the day. So US 500 seems to be pulling off a similar thing. So after coming back, retesting these areas, all we are seeing is signs of the market now bouncing from here and looking to retest the Asian high. So BTC made a very strong rally, got to $94,564 or thereabout. But then since getting there, all we have been seeing is a pullback. So we shall wait until we see signs of a break. But for now, it seems to be finding very strong resistance at that area. So potential pullback could be in play. Let's see what happens towards the end of the day. But always remember, when we have these sharp pullbacks, there are opportunities to look for more buys. So on the European side, before we go to the European side, we have New Zealand USD. which has been on a very strong rally, but upon hitting resistance, now we are seeing a very strong entry by sellers, which is indicative of the strengthening of the dollar. So as we have discussed in other currency pairs, we start now eyeing the Asian session low. So European equity indices, the German DAX just broke into a new all-time high yesterday. So today it's looking to extend that rally. Notice how we have had some pullback, and that pullback is being met immediately by buyers buying the Asian low. So if you look at the Asian low, this was the lowest price on the Asian session. Market went for it, and now it's bouncing right from it, looking to go for a new all-time high. So this would be my favorite chart of the day. That is for the DE40 on your MT5 or the German DAX. So the Euro stocks made new all-time highs on Friday and on Monday. Today it's looking to extend the same. So after a quick trip to the Asian session low, we are looking at a potential bounce from that area and more bullish momentum coming in. The France 40 is still in doubt, doesn't look all that bullish compared to the other European indices. The Swiss 20 index also looks a bit shaky after yesterday's sell-off and an attempt to recover towards the end of the session. But then, if you look at the Netherlands 25 cash index, it's just at the brink of breaking into a new high. So this looks more promising compared to the others. So if you go to the 4-hour time frame, notice how the market has been on a very strong rally, and now is bound to extend the rally from here. So potential strong momentum break could break from here. And of course, we know the law of large numbers or round numbers. So most likely, without candlesticks on the left, you could be seeing the 1,000 price level acting as a magnet, with the market extending the rally to 1,000. So dollar trading against the CAD had a quick trip to a key resistance area. And once we go to this resistance area, you can see how the sellers came in its time frame. It seems like the market is ranging between two areas here. With the market being on lower volatility, there seems to be this range here. So I expect the market to remain within this range until we have more catalysts in the market, like the non-farm payrolls we mentioned, the ADP non-farm payrolls, the IVA PMIs, and so on. So far since the market opened, little to no action. So that's it for the day. I'll be checking on the comment section to see if there's any questions, answer them as we approach the end of today's presentation. Good morning, Maureen, and Happy New Year to you too. So, sorry.
Interesting. What led the decision to go full time?
Yes, I just wanted to share our latest episode of the Bullish Banter podcast. So far, it's doing really well. Thank you guys for your support, for sharing, for watching, for commenting, and reviewing. So it has been an amazing year. So far, we are celebrating breaking the 100 episode milestone. So it has been a great year. So for those who don't know, the Bullish Banter podcast is a podcast for traders where we get to talk about market strategies and what's really happening around the world, how you can take advantage of such. So make sure to check out the podcast if you are new. And of course, if you are looking to learn how to trade Forex, you can check out our socials for our Zoom classes. They are continuing this year. They are free of charge. And on top of that, you can feel free to check out the Novice to Pro course available on FXPesa YouTube, and that will help scale your trading. So if you don't have an account, make sure to check the links in the description below. If you're watching this on X, Facebook, or any other social media, make sure to check out our links and register for a trading account. It's free of charge. You get approved within 10 minutes and take advantage of the current offer where we have 100% deposit bonus. So if you deposit $1,000 right now, then we will add a bonus of $1,000. So the bonus is capped at $5,000, and it only applies for a person who is depositing for their first time. So that's it. That's it for the day. Enjoy the rest of your day, and I hope you have a peaceful week.